welcome to this very special show live from the Bombay Stock Exchange, 16 for 16. As the name rightly suggests, we're going to be giving you 16 multi-baggers for the year 2016. And Anuj is also with me. We have a power-packed house here and a power-packed lineup with a lot of experts. Anuj, as they say, all good things come in small packages. And this year, while the headline index has not done anything, it's been all about the smaller stocks, right?
Oh, yes, and that's why we're discussing the small caps and mid caps for 2016, because the sense you get is that that's going to continue. You know, Sonia, this year the index hasn't done much, but if you would have invested in all NSE stocks, you would have made 24% without choosing any stocks. And if you got the stocks right, you would have made so much money. And we've got a battery of experts.
Yes.
Porinju, for example, identified Force Motors at what, 400? It's 3,000 now. Mr. Tulsiat, two of his latest stocks have doubled in the last 3 months. Prakash identified Quality at 45. It's 150 now. And Amrish, of course, we had Himmat Singh side that's given 200% return. So if you want these kind of returns, we have the full house with us. So welcome all our guests and start the show. Porinju, let me start with you. Your first stock is Indian Hotels. Its market cap is already 9,000 crore, I believe. So at these levels, do you still think that it could be multi-bagger?
Of course, yes.
Okay.
Not multi-bagger, please don't.
Okay, but it can give good returns.
Yeah, see, going forward in 2016 and all, there will be much less number of multi-baggers, is what I believe. And why I have taken some of the larger companies, the large mid-caps, I'm also moving slowly from the small caps to mid-caps. And maybe it's time to look at some large mid-caps. And some of the large caps, which I used to be always ignoring the last many years. So things are changing, you know. Now you cannot go by what happened in the last 2 years and what will happen for the next. And that cannot be a criterion for assessing what will happen in 2016. The market structure changes, the valuation dynamics changes. So it's time, you know, one should be very dynamically managing it.
Okay.
Okay, so for Indian Hotels, you know, this stock has gone from what, 60 to 115 in 2 years. What is the expectation in the next 1 year?
This is a company, in fact, I have selected 4 companies which are underperformers of last decade till recently. And Indian Hotel is one of those companies which did not create wealth in the last 10 years. Okay. Maybe they might have just met the inflation at best. So there are various aspects. One is industry-related the challenges. Another one, I believe it's a management was not very dynamic in creating wealth for the shareholders. So those 2 aspects are changing. There's a turnaround happening in this business. It's a very large company with around 16,000 rooms in 130-40 kind of properties. And in fact, I am staying in Taj Palace today. I came for the program. You know, the kind of properties what this company owns, some of them are, you know, very difficult to do value on these properties. Maybe this company is available today at a market cap which is equivalent to the price of this hotel I am staying. You know, the Taj Palace in Colaba. So there was a depression and a bad sentiment on these companies in the last over a decade. So I think this is the time, this is an inflection point. Tata Group, they are talking about profitable growth. So they can do many wonders. If they dynamically manage this company, this can go to 40 to 50,000 crores market cap over a period of 3, 4, 5 years time.
Okay, fair enough. Mr. Tulsian, let me start with you. Let me go to you next. You've been having a love affair with these auto ancillary companies all year, and you've picked out a couple of stocks. So start off with your first stock.
See, my first stock is MCX. In fact, I've chosen, let me first take a little deviation from the auto ancillary. You are right that I have auto ancillary also. But first stock I have chosen is MCX. In fact, let me first make the multi-bagger concept very clear, Anuj. What people or investors loosely call multi-bagger, for multi-bagger you need to have a time horizon of maybe 2 to 5 years. Because you cannot expect a stock to maybe quadruple, triple or double in 1 year. If it is happening, that's your luck. But as a fundamental analyst, if I'm giving a call of maybe 30-40% an annualized return, though my all 4 stocks have an expected return of about 50% in this 1 year, that is on 2016. But if all those 4 stocks are held for maybe 3 to 4, 5 years, they can, keep giving you a return of maybe 50%, 40%, 30%. And that's how in maybe 2 to 3 years, they will get qualified as a multi-bagger. So my first stock is MCX, Multi-Commodity Exchange. If you see right now, there are 12 commodity exchange and the consolidation is all happening. The regulator has shifted from FMC to SEBI. So there was transition for last 1 year and there was lull in the business activity. No new clearances of the options and all that have been given. This premier commodity exchange is having a market share of 80% plus. If you quickly come on the market capitalization sub 4,400 crore, company has a net worth of 1,200 crore. And that 1,200 crore, entire 1,200 crore is into the cash and cash equivalent. That is yielding the annuity income. What they run in fact, it's a negative working capital business. They have 400 to 500 crore as a working capital, which they as a settlement guarantee fund and all that from the member. And as I said that because of the transition having happened from FMTC to SEBI, no new business has come to this exchange. In spite of that, in FY15 and FY16, they will be having an EPS of 25 rupees. So now, if you take a call on the EV of the company, 4,400 crore, sub 4,400 crore market cap, minus 1,200 crore as the cash and cash equivalent, you are getting a premier commodity exchange at 3,200 crore. Just to give you an example, stock exchange, NSE has a market cap, it is not listed, but the valuation is at about 30,000 crore. And world over, commodity exchanges are always enjoys the higher valuation than the stock exchanges. It's just a matter of time. And as I said that right now, 12 exchanges, 6 are going to close the shop. Now, actually the competition will remain only between MCX and NCDX. NCDX is again NSE exchange more focused on the agri kind of things. So taking all this into consideration, then again 51%, there is no identified promoters. More than 51% is held by 14-15. Again SEBI investors with 15% held by Kotak Bank, Kotak Mahindra Bank. So taking all this into consideration, I think this is an ideal time to mentor. Probably from April 2016, we will see the new contracts or maybe the options and all started allowed to this exchange by SEBI, and that can really be a takeoff point for the exchange. And my target is at 1,250 rupees for 2016. But yes, if you can hold it for 5 years also, this will keep you giving good returns and prove to be a multi-bagger.
Okay, so that's on MCX. Prakash Diwan, welcome to the show. Plastic Blends. That's an interesting name.
I know. So I thought let me deviate from all the auto and stocks that we keep on talking about every day and then get a flavor of something new. And what's interesting about this entire sector, and we've been noticing that specialty chemicals is becoming a very clear India strength and a story which is in sync with the Make in India campaign. For example, Plastic Blends, if you take this instance, they are one of the largest manufacturers and exporters of batches of additives and compounds which are called thermoplastic compounds, which go into colorations for plastics. And they make batches. This is not an assembly line business, so China doesn't come in the way. You have very high environmental issues in Europe, so there's no competition from there. And these guys have expanded globally so smartly with immense pricing power coming to them. And as part of the Colside group, the Cabras have been around for a long time, have a very good reputation in the market. And Plastic Blends is available at just one-time sales market cap, which is for 500 crores. The EPS growth that we've seen and going forward, which is expected, I wouldn't be surprised if they've already notched up the entire year's EPS in the first 2 quarters, and that's kind of getting the momentum in. If people were to do a simple multiple for an exclusive premium business like this, it could be about 18-20 times of the next year's EPS FY17. The stock could give you a 50% upside. If you wait for another year, it will probably be 800 plus. So it's got that momentum in its favor. Couple of years have been kind of low, but the specialty area of where there's so much of entry barriers, it's going to be difficult for anybody to come in, take away market share. So they just don't bother about all that.
Okay, so let's take stock of what we have so far. A very interesting mix. One hotel company, one exchange, one specialty chemicals. Let's talk about something entirely different. Media. You've picked up HT Media today.
Yeah, in fact, I picked up HT Media. The main reason was in the last couple of months, whenever you open the newspaper in the morning, before you reach the headlines, you normally have to pass through 3, 4, 5 pages of full-page ads. Where does that go? That goes to the top line of all these companies. So that was one of the reasons why I picked up HT Media. But then at the same time, if you dig a bit deeper into it, They have nearly 1,600 crores worth of investments into Hindustan Media, which is again a group company. What is the market cap of HT Media? 2,000 crores. They have a decent exposure to digital media, which is the fastest growing. And there you have other companies quoting at 40, 50 PE, but no one really wants to give discounting for HT Media. They have about 1,000 crores of cash and cash equivalents. So actually at the current levels of 85, 90, you're actually getting the media business free. I don't think you really can ask for anything more than that.
Well, those were the first 4 pearls from our experts here, but don't go anywhere. We'll take a short break and come back with lots more.